Hi everyone, Ray here from EMA Mortgage Team. I just wanted to talk to you about appraisals today. So we've been getting a lot of questions relating to appraisals lately, and it's very understandable. The reason for it is that it's a very competitive market for buyers right now. We see multiple offers coming in, and the ones that are successful in buying the property, they're typically over asking or over the listing price. So it does put a lot of pressure on those buyers to go into a purchase or an offer without conditional financing or going in firm. If we did your mortgage pre-qualification, you would know that the property is a critical component of a mortgage approval. Let me talk to you about 5 questions that we typically get. Number 1, what happens if the appraisal value comes back short of the purchase price? It's a very good question. If your down payment is relatively large or your mortgage amount is not to the maximum allowable based on the ratios, there may be scenarios in which where we can just make adjustments to the effective loan to value based on the lower appraised value, but still give you the same mortgage amount. So effectively, we make adjustments and resubmit it based on what we call a loan to value adjustment. For that scenario, you're moving forward with the same mortgage amount. Now, for scenarios where your down payment is at the minimum or the mortgage amount that we're giving you is maxed out based on ratios, for those kind of scenarios where maybe the purchase price is at $750,000 and the appraisal amount comes back at $740,000, so there's a $10,000 difference, there may be a point where we will ask you to increase your down payment by that same $10,000. The second question is, are there possible deficiencies on the property we need to watch out for? Yes, marketability is one of the major ones that we need to address. So if you're buying a unique property, it's, let's say, a water tower converted into a home. Now, not everybody would like to live in a water tower converted into a home, so there might pose some marketability issues. If you're looking at a property that's so unique, like maybe it's the smallest house in the GTA. So those are certain things that we need to address if we are getting something that's so unique. Now, the remaining economic life is another factor to address. Remaining economic life is that if the property that you're looking to buy needs to have big major renovations to be done because it won't last the next 10 years, 15 years, or 20 years without any major fixes or renovations. Now, that's something that may pose some issues with the type of mortgage amortization or mortgage approval we're able to get. Now, the health of the property is another thing that we have to address. So if you're saying, Ray, I bought a previous grow up, or the windows are boarded up, or the basement has major leaks and we see a lot of moisture and damages from that, obviously the health of the property is something we need to address. The third question is, how much is an appraisal? Now, an appraisal is typically anywhere from $400 to $600 normally in a rural area, and if the property is not a unique property. Number 4, how long does it take to get an appraisal report? We usually get the report around 24 hours after the appraiser visit or appointment. Number 5, can clients get a copy of the report? The answer is no. Even though the clients pay for the appraiser to go in to visit the property and fill out the report, that appraisal report belongs to the lender. One last point. If you get a mortgage approval with a full appraisal requirement, fulfill that condition as soon as possible. You don't want to expose yourself to any potential market swings. Thank you for watching. Have a great day.